Hey everybody, this is Jim at SP500chart.com, using time-honored techniques to try to understand these modern markets. We're going to take a look at the chart today after I read this to you in one breath. The website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. And hey, that went pretty well. So let's see what we can do with the chart. Well, needless to say, we had a rally today. And what was kind of interesting was we'd pointed out this potential channel here with this, call this a mustard colored line. It's actually like a dark yellow. But you could see this really wasn't working perfectly. But yesterday I decided, well, it's the closest thing we got, so let's just go with it. And here's what's interesting. About midday, we were kind of running into this line, and I was thinking to myself, is that going to hold? And then we got these two little tiny green candles, then that little pullback, and then I just kind of took my eye off the news. Okay? I'll be honest with you, I was busy doing some other things, and I said, well, let's go back and let's see if we got a bounce. And I came back, and the S&P was up over 1720. I said, yeah, we got a bounce. I thought that was kind of funny. So what does that mean in the context of the things that we'd been looking at over the past couple of weeks or so? Well, the first thing it means is, even though we did not get a right shoulder over here, we got our minimum expected target from our shoulderless, from our, normally you call these head and shoulders. This is a shoulder, inverted shoulder and head pattern. And I don't want to say that we should always bank on this happening. I frankly think I did the right thing in being a little circumspect about what was going on with this. By the way, it made me look kind of stupid for having sold my SPY position at about 1703, but hey, I knew there was a chance. The good news is I got in at the rock bottom back here, so missing getting out at what may be the top, that's not such a bad deal. So we made that target. That means, based upon this strangely shaped thing down here, that we cannot point to this anymore and say, hey, I think we should be making 1715, because we did it. So in an effort to do a little housekeeping, let's just remind ourselves that target was met. And I'm going to get rid of a few other little lines here. I don't think this one's going to be necessary much. And let's keep everything else. We also got a big question answered, and that is, once our last head and shoulders top, which I will highlight for you right here. Here we go. Kind of a double left shoulder, head, and then again a very small right shoulder. I asked the question, if we make the minimum target from this pattern, when we come back to the neckline, will the neckline serve as resistance? And I think that's something you just have to look at on a case-by-case situation, because sometimes it does, sometimes it doesn't. There have been times when the major market tops would have a pattern that would break down, make the minimum target, come back to the neckline, and then head down with a vengeance. Okay? But we are not there. Something else interesting happened today. You'll look at this blue line. And to remind you, let's just go to a daily chart for this blue line. And you can see that it is drawn over the highs of May 2013 and the highs of early August, I believe it was, 2013. And these were two parts in the chart that were tops. And we've got this line drawn across these. We got over that line today. Now, you may ask yourself, yes, but was it a technically significant margin? No, it was not. Not really even close. But the fact that the S&P said, heck yeah, when presented with that little, with this line of what we would expect as resistance, shows you something about the strength in this market. Now, I'm going to talk a little bit more about this line, and just bear with me if you will. This line is slanting upwards, but it's not slanting up by a huge margin. I got to adjust something on the chart. Hold on just a second. Okay, I'm wanting to get this in a little bit better range. So what we've got is we've got these two dips right here that occurred underneath this line, and this line is slanting up just a bit. How much is it slanting up? Well, when we first tagged this line back in May, we were at 1689. When we hit it again in August, we were 20 points higher, 1709. And now we're hitting it again, and the line itself is at about 1721. So the question, and I think, and this is where sometimes charts just get funky and not easy to understand. The question is this line slanting up enough for us to be concerned about getting a little bit over it? Or is this line flat enough to where we would consider any more move above it to be a breakout over this level? And that's just a question that I've got, and I'll be honest with you, it's an honest question because it is a question to me, and I do not have the answer. So I would just say this. I would say let's treat this line, if we get more over it, more technically significantly over this line, let's treat this line with a little bit of respect as being a signal of a breakout, but let's not be real aggressive about that opinion. Now here's the deal. If this is a breakout over a legitimate line of resistance, then we go back here and we measure our height, and if this breakout ends up being true, we're looking at a target of about 1868. Now what makes this even more interesting is the fact that in order for us to get there, the S&P would have to rally over the top of this red line that has a pretty decent history of at least going back to these two tops back here, which were significant tops in 2010 and in 2011. So really interesting stuff going on here. This today looks to be a pretty could be a telling day. Let's see if we get follow through tomorrow. If we get some follow through, by the way, I'm going to give you a heads up on something. Just before this breakout, because I'd been watching it for a while, I bought some Coca-Cola, because Coca-Cola was down at the bottom of its channel on the verge of a breakout over a consolidation pattern, and right when this hit, it did break out. So you might just for the heck of it, take a look at Coke, KO, take a look at the chart and see if you think there's anything there. But anyway, if we get over this line and it's technically significant, then I could see a rally taking place over the next number of months that could, while staying underneath this red line, could take us to that 1868 level, and it would be happening in, it could happen in the middle to latter part of December if we stay underneath this red line. But for now, let's not get too carried away with that, because like I said, this is not, if this were a flat line, it's still not a technically significant margin. So let's see if we get some follow through tomorrow, and if we get follow through, let's see if we maybe can get up to a technically significant area, and see what this S&P's got in store for us. Guys, I want to thank you again for watching the video. Take care.